let's do this time the questions as regards. First, we're looking at the fixed income market. What we had for the treasury bills market, we saw that yesterday it was a bullish kind of a mixture there, both across the treasury bills market, the OMO market, and the FGM bond market. Well, so we'll be talking to the Director of Research and Strategy with Chapel Hill Denham, Mr. Tajuddin Ibrahim. So he'll be giving us details about that OMO auction, which the CBN was able to raise about 1.5 trillion naira from the OMO auction, and then it's targeted about 100 billion naira for the FGN bond auction. That's for the July bond auction, and which also came oversubscribed. So now let's bring in Tajuddin Ibrahim to give us details about this. Thank you for joining us, Mr. Tajuddin.
Thank you for having me on the show today.
Okay. So now, give us your expression about your reaction to the latest the results coming in from one side, the FGN bond auction from the DMO, and on the other side, the OMO auction result from the central bank. So, what do you make of these two results, and how are investors reacting to it?
So, thank you so much for having me on the show. To start with, when we take a look at the the bond auction that was held, one of the key takeaways around it is that the bond auction, showed that the government was not aggressive in terms of issuance, because in the calendar or the notice of bond issuance was showing just about 80 billion naira in terms of the planned issuance, but eventually they issued or sold about 180 billion naira in total. And what that implies is that the federal government is not that aggressive when we look at bond issuance. On the back of the fact that they are not aggressive, we began to see yield come down, particularly, specifically speaking, at the end of July, at least as of yesterday. Average yield on the federal government bond curve came down to 16.3% from 18.5% at the end of the month of June. So what that implies is that when we have the government being less aggressive in terms of bond issuance, what naturally we will see is that the yield in the market will be coming down accordingly. And when we talk about OMO issuance, the OMO issuance and sale of 1.5 trillion yesterday is an indication of the liquidity mop-up by the CBN, because liquidity really built up in the market, largely because we had FAC inflow into the market around 850 billion naira. We also had primary market bill repayments that flew into the financial system. So there was a need for the CBN to mop up excess liquidity via OMO bill issuance. That really is what played out. And we also had slightly lower yield compared to where we started this year.
Okay, so now, Mr. Tajuddin, there's been this inverse movement in between the equities market and the fixed income market. But as regards the FGN bond or the bonds market, what are the emerging trends for investors' appetite, if there's any? Are there any emerging trends for investors' appetite within the fixed income markets?
So within the fixed income market, we still have investors still being speaking interested in the market, particularly those that are fund managers and also those that have the liquidity to play in the market. So what we only are experiencing is a situation where yields are falling in the market. And I think it is a reflection of the overall health of the economy, particularly when we take a look at inflation. When inflation is falling in such an environment, you will find that yield on fixed income instruments will be falling. That is what we currently are seeing, and I think investors are encouraged, to go big on bonds at the current levels of around 15.5% in terms of yield, considering that we are still going to have a situation where bond yields are going to fall further in the coming months. largely because of the relatively favorable outlook when we talk about inflation. So I believe bond investors, investors should still be taking position in the market. When they take position now on a mark-to-market basis, when yield continues to fall over the next couple of months, what most likely you will see is that such investors that take position now will be making money because the prices of such bonds would have risen. And I think we have a situation as we speak where we have the equities market is going up and the bond market is also going up. That is a very good development in any capital market around the world.
Question with you, you just mentioned the equities markets. Now, the equities market, I'm sure if you have a tracking there, you can see if probably has crossed the 139,000 index level. So when you take a look at that, let's marry that with the latest earnings results, I know, which is one of the contributors to this stellar performance that we've never seen, about almost a 20-day consecutive gains on the market. So now, what are the reactions, or what are the latest earnings? How are they affecting the market?
The latest earnings published by companies listed on the NGX, those earnings are robust, particularly because they show significant recoveries by some of the companies that are listed. Let me talk very briefly around them. Number one, we have Nestle that delivered a remarkable set of results for H1, with revenue growing at over 42%, and also with the profit after tax being positive, compared to the loss that they had at the corresponding period of last year. Presco is another one. Presco's revenue grew at a much faster pace of over 100%, and the profitability is also very solid, with EBITDA margin improving to over 66% from just around 64%, the previous year. That is on the one hand in terms of how they have performed, and just to mention those two. Let's look at what they have also done. 11 companies, as we speak, have announced interim dividends on the back of this robust result that they have published so far in the first half of this year. And what that implies is that you are going to see more investors take interest in the market to take advantage of the interim dividends that these companies are announcing. So I think those two factors, number one, stronger performance, number two, interim dividends, are the two drivers of the performance that we are seeing in the market currently. And I reckon that by the time the banks also begin to report and announce interim dividends, the performance of the market could be a lot stronger than the current level that we currently have in the market.
Well, thank you so much for your analysis, Mr. Tajuddin Ibrahim, Director, Research and Strategy with Chapel Hill Denham. We hope to have you next time on the show.
Thank you so much.